All right. Hello, everyone. Welcome in. Welcome to the third quarter. This is obviously a couple days before 4th of July, so I'm not exactly sure what to expect attendance wise, but thank you all for joining that are already here. We're going to keep it fairly short and sweet tonight, probably just around a half hour. So we'll get Kelly in here in a second. And as always, if you guys want to get your questions out of the way early while we're going over market updates and such, feel free. Make sure we don't miss any, but we will probably stop right around the top of the hour. So with all the, oops, that's a screen share. With all the few housekeeping things out of the way. Hey, Kelly, how are you?
I'm hanging in there. I feel as closer we get to 4th of July, the more likely I want to take afternoon naps.
Right. Especially when it's 100 out.
Right. Oh my
Just sit in
gosh,
the
it is.
AC and try to stay cool. Well, cool. Well, I'm just going to kick this off and get the disclaimer out of the way. So iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip Smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. While I have the screen up, do a little bit maybe of a different market update. Still talk about that, but obviously the second quarter just ended. So we want to talk about Q1, Q2, and then I also want to spend a second on the 4QR portfolio. It's a very unique one and maybe not misunderstood to everyone, but I think there's enough questions that I've gotten on it that it might be wise to go over with you all tonight. So, Kelly, I've probably talked enough. If you want, I will swap our screens. Oops. And I'm really killing this thing today. Turned you off and kept my screen on. So I got your screen up. Why don't you go ahead? If there's anything you want to start with, obviously feel free to.
No worries. Yes, Lee, you talked way too long there.
Too much.
You
Like
stole my
2
time.
minutes.
Stole my time.
This is your show, not mine, though.
Lovely. Um, well, hello, everybody. Happy beginning of the third quarter, which is always kind of the ultimately the official summer move into the end of summer, which is Labor Day. I always think of these things kind of anchored by Labor Day and 4th of July. So I think the first thing to go over today, after 2 weeks ago, nothing really much has changed since then. Of course, the market has made new highs. It was something I think we kind of expected as the big beautiful bill is trying to roll itself out. As everybody probably knows, the Senate passed it, but they only passed it to go back to the House. And now the House has to make a lot of angry GOP senators, angry GOP congressmen and women redo the deal to go back to the Senate and get another stamp of approval. I just personally do not see, as patriotic as it would be to be able to deliver it to Trump on the 4th of July. I personally don't see how that's going to happen. But as you could tell, it doesn't matter to the market. Today, the Dow Jones was down 10 points. Yesterday, it was up 400. But yesterday, the S&P was up about 30 cents, and today it's up 30 points. Yesterday, the NASDAQ was actually down about 180, and today it's up 160. But if you look at this chart, just take a look. I mean, it's nothing. These are nothing movements. A 1% move is actually very little at this point. And when you start to see bars on a bar chart start to look like this, in other words, they all look like the bars before it, it's obviously telling you that the VIX is coming in. And boy, has it. Look, it came in. Back down, printing close to its all-time lows, around 1664 currently. It tells you that the risk is definitely on. But really what's happening, yesterday, I think everybody might have noticed that the Dow was up 400 and the NASDAQ was down. Basically, one was up 4%, 0.75%, and the other one was down 0.75%. We're seeing a lot of that lately. It is unusual, but we're seeing more of it. And why? It just shows you the nature of the two indices. If the indices were combined, it would be a nothing burger. There is no point to look at the Dow Jones Industrial Average because it actually is meaningless. The S&P still tells the story. But at some level, so does the NASDAQ at this point, because so many of the NASDAQ companies really are the drivers of the market. One of them, of course, is NVIDIA. Now, I personally am not a believer in NVIDIA, but it's at all-time highs. And it's also a $4 trillion cap stock, just like this one, Apple. And by the way, I mean, so we're starting to see the Apples and the Microsofts of the world and the NVIDIAs of the world all having $3 and $4 trillion evaluations. If I were to took these big tech 7, the Mag 7 here, these 7 stocks, we actually have the GDP of the country combined inside of that. Very close, which is kind of amazing. I think it's not very close. We have approximately 60% of GDP could be coming from these 7 stocks. It's really amazing. Let's quickly go through it because there really isn't a lot to report here as we go into the 4th of July holiday. I think we all kind of understand that the markets aren't going to do anything. The big, beautiful bill is really why the markets are sitting at these all-time highs. So let's look and see what's going to happen. The best bet is that as the bill is digested, what happens? If the bill doesn't pass, which that is going to be a problem, we will see a market sell-off. But we all kind of know that the huge incentive in the Trump agenda is dependent on that bill passing, which means that at some point, hook or crook, it's going to pass. And when it passes, at some point, the markets they will make new highs. And when they make new highs, the question is, where do we go? I mean, the first stop, according to, if I had to go to Edwards and McGee to make the call, I would say it'd be a full standard deviation higher. That puts it all the way up at 6,800. That's another 10% rally. Is that unreasonable? The market is flat on the year. No, being up 10% wouldn't surprise anybody in 2025. So I do think that the bill will pass, and I do think the market's probably poised on the more likely side to go up to 6,800 by the end of the year or some point in between. Another thing is notice this V bottom we see here on the S&P. It's on all the major indexes. The Dow had it, and of course the NASDAQ. We had these V bottoms. A V bottom is just this movement. But I think it's really noteworthy when you see things like this. If you're an observer that only looked at a quarterly return, what would you see? If, in other words, we went into a vacuum and we only came out on the end of every quarter to look at the price of the stock, we would say, well, let's see what happened. Well, in the first quarter, as we saw, the market came in January 2025, right around 20, where are we? I got to look at the NASDAQ. Let's look at the S&P, sorry. Market came in 2025 right here at 58.40. At the end of the quarter was right here. It was at 56.40, down 200 points. Well, if you look at that, that's down about 4%. That's it. It was down 4%. What was the market in the last quarter? Some people have said, oh, the market was up like 14% because they look at this low in early April, which was right after the beginning of the second quarter. But quarter to quarter, the market at the end of the first quarter was about 5,600. Now it's 6,200. Well, guess what? 5,600 to 6,200, that's clearly approximately like a 9% move. So the market was literally down about 4 and up about 5. And guess where's the market right this instant? From the end of the year, we're up about 5. Do you see? Down 4, up about 9, for a total of up 4. So that one observer that just looked at the thing at the end of every quarter would say, oh, this was a nothing burger. Nothing happened. So I'll go back to sleep and I'll wake up in another quarter. What he missed is all this craziness that doesn't show up depending on when you look at it. Even if you looked at it on a monthly basis, April actually moved down 10%, and then it actually rallied it all back by the end of the month. Which means, in other words, at the end of April, someone might say, hey, the market was actually up by the end of the month of April, even though it was down about 13-14% during the month. So this is a really important thing. It's observation points. A lot of people don't understand the volatility of the market unless they look at it in a very fine, granular way. And the market is, believe it or not, it shows you that there's explosive volatility in this market. It's come out of the market because you can see, as you see the bars tighten up, in other words, they get tinier, shows you the volatility is going away. But when these bars get like this, obviously the prices are moving, but it doesn't mean that it'll end the way it looks. I would love to talk about this to a great length. This is one of the reasons it's hard to use stop loss orders in the market, because of stuff like this. You don't know the true pricing when the market's under some kind of news duress. In this case, it was the tariffs. But let's keep going to get the general market cap. Most of the things that we saw from Apple and everything else definitely had trouble so far this year, and including still now. Apple for the year is still down around, it looks to me about 10% or so. Amazon, down just a little bit on the year, but, or flat on the year, but they've all kind of recovered. Google's actually, not down on the year. Meta has done very well. It was up on the year, down on the year. Now it's back up, made it actually a little new high and backed off. Netflix is the big outperformer. No matter what happens, people still need to watch a movie, right? So it tells you one of the reasons why to kind of own this stock. Where does it go? Geez, this stock could probably go to 2,000. Microsoft, here's another one. It just has revenues. The world shuts down, Microsoft's in trouble, but the world isn't shutting down. And look at Microsoft go, another new high. NVIDIA, same thing. This is a stock I just can't get my arms around, everybody, but I have my reasons. But obviously, whatever my reasons are, they're wrong. I'm glad to say that the system is in the market. It's one of the reasons why it's so hard to pontificate, and why anything that word comes out of a talking head like me or someone on television, honestly, it's kind of meaningless. Really, what matters is, hey, are you in it? Are you making money? And if you're not, then really don't talk about it. So in this case, I'm not going to talk about it because I'm not making any money personally in NVIDIA. Albeit the system is. Oil markets, of course, we kind of know what happened here too. The tariff thing, the war thing, the craziness of oil. Oil is a commodity at the end of the day. Oil is, personally, it's been my own fundamental bet most of my life, and it's paid off for me. The energy business is fundamental to the way a country's work, no matter where you're at. And the only reason really not to own them is if you're green. And I'm not green. I'm just saying, hey, where's the best place to park money where you feel that it has safety, it pays dividends, and you can frankly retire by owning some of these kinds of stocks. So oil has been all over the place. It sits at $67 a barrel as we go into the 4th of July. Not much to talk about, really. Let's talk about a couple of the favorites. I always do. Of course, they are Energy Transfer and Plains All American, respectively. ET, and PAA. They seem to have decent days today. What's really going on here? Again, the move down in April was, of course, the stock market and tariffs. That was the reason that set these things down. Both All Plains and ET both had huge spike downs during that time. The interesting thing is, I call this a dislocation, is they haven't recovered that, even though the market and all the other stocks have. They've all either recovered completely or made new highs. Why is the energy market kind of lagging? Well, part of it, and here's in particular All Plains America, part of the reason is we all know that the goal of this administration is to get the energy prices down collectively. No matter what energy, whether it's coal or natural gas or solar, everything, all prices must come down. Energy is a fundamental component of inflation. The goal of the administration is to reduce and kill inflation. And it's very obvious in its language about how to do it. Drill, baby, drill. You know, we have an oil secretary with Bertram from North Dakota. So we have that is in charge of the Energy Commission in America, Energy Secretary. The reason is that we're really focused on that. And this is one of the reasons why when you have an administration like this that signals what it's trying to do, those are the stocks that tend to be represented inside your portfolios. We want to be where the language is. If there's language behind a sector for a government to do something, we want to participate in the stocks where that language is focused. They're not using this language to drive the stock prices down. They're trying to accomplish something. And whether we agree with it or not is not the point. What matters is if the language is strong to reduce the price of oil, then we should recognize that, hey, energy is going to change. And if you're a regular oil company, maybe in the case of oil, maybe if oil prices are lower, maybe I shouldn't own that. Maybe I should own something else. That being said, if I just look at ExxonMobil. Well, Trump was elected back here in November. ExxonMobil is only a little bit lower than the time when Trump got elected. Look at Energy Transfer. Trump got elected in the beginning of November. It's actually up a little bit. Trump was elected in the beginning of November for All Plains American, and it's up. So even though they're off their highs, they're still up, even though we have an administration that has strong language. The reason is, in this case, is because they pay great dividends. And these companies are a little more than just pipelines. They're extremely well run. And this is one of the reasons that they especially exist inside of a conservative portfolio and, of course, represent 50% of the red oil Smartfolio currently. We like these stocks. They are worthwhile to own. They are linchpins right now in a good, strong portfolio. Let's kind of go through it. Goldman Sachs, best of the banking sector, hate them or love them, like anything else. New highs, huge recovery from the lows. I really wish our systems, we came so close to a few purchases in this, but we just didn't get them. Who knows? Craziness in the world. Here, the cruise lines making new highs. Look at here. Look at Carnival Cruise Lines go. Here's the other one. Seems to always lag is Norwegian Cruise Lines. But if we look at them, they seem to be moving higher. Why is that? This is a play on knowing that the economy is going to do well and people will travel. And gosh knows people love cruises. I'm not a fan of them, but I think I'm in the minority. CrowdStrike, again, another good company, does AI security, internet security, basically new highs. Same thing. Look at the Mesabi Trust. What is the Mesabi Trust? It's a company that essentially, it's run by 3 people, and it's minerals. They're miners. There's only 3 people in this company. And if you look at it, it seems like, well, this is doing nothing. Well, no, it isn't, but it's paying a dividend. I could tell you that. It's 56 cents a quarter on a $24 stock. So that's basically $2.18 a year on 24. That's 8%, folks. Like, oh, and you see this ground move here? This one, what that was a $6 dividend from a lawsuit. So really, if you look at it, they won a lawsuit, they gave it to their shareholders. That's why the stock dropped $6 in a day. So if you really think of it, if they didn't pay the dividend, this stock is up here. It's the difference of the $6. So you have to be careful when you look at things to see what they are. One of the other favorites I've been having is LandBridge, as you kind of know. These things seem to be struggling right now. I do like them. These are basically thinly traded stocks, but at the same time, they represent the infrastructure that takes years to develop. I feel these stocks are huge winners in the future. Again, this is an opinion, and I am allowed to opine on this platform, AI Circle, every other Wednesday. And my opinion is that these are stocks that even though you can't put AI onto these things quite yet, because look, there's really no data, it wouldn't even really matter to me when you have this concept of what can it become. And again, this is part of a theme for the current administration that is trying to build out infrastructure. We're almost done here. This one, somebody mentioned to me the other day, this is called Microsystems. MicroStrategies is a company that uses a bond to buy crypto. So basically, they sell bonds, raise cash, buy crypto with that cash. The advantage of it is that they don't have to come up with, they can pay an interest rate on the bond, and they don't have to come up with cash, their own cash, to buy the crypto. It's a levered play on the Bitcoin market, the Bitcoin cryptocurrency specifically market. And this is very volatile. It's at $400. I think it makes new highs along with Bitcoin, and we might as well quickly pop over to Bitcoin and take a quick look. Yeah, we're right at the old highs. I know we were up a couple of thousand today on the Bitcoin itself, but when I look at this, I could tell you I remember 63 was around the high, 64. We're right there, up 4% on the day. I mean, huge moves. Sleepers that have been out there that are just not interesting, but kind of climbing up. I'll give everybody a stock here. Amphenol. Look at this stock. Does anybody know what this stock is? I mean, you have to admit, if you just go through the years, this is back all the way to COVID, right in here. But here's 2019. It was a $21 stock. Now it's basically $100. That's gone up 500% in the 5 years. What's wrong with that? Do you know what they do? They make those little electric components behind every switch that we have in a house or a commercial building. Somebody makes those little twisting things and the little connector things. This is the company that does that. As long as there's some kind of growth in this country or around the world, they're going to need electric switches. This is a company that does that. It's the largest that does that. And it will be finding its way into our balanced portfolio in probably the near future. I'm looking at that at the beginning of the fourth quarter. Here's another interesting, crazy, boring play, but it's water. Echo Labs. Don't underestimate water. Water is a form of gold or oil that we do need, and it's not as available as we all think. The planet may be 3/4 of the surface is water. That doesn't mean it's drinkable, and that doesn't mean it's easy to get to the most of the living planet, which is us and plants. And Echo Labs, if you're getting water, this is generally one of the companies that is the main supplier of water in America, especially bottled water and many other sources. And again, its too is at an all-time high. And if I were to just go back to 2019, again, let's just point out how boring stocks can do very well. So this stock was $150, about $150 a share at the beginning of 2019, and today it's at 272. So it's up 120. So this is up 100% over the same 5.5 years, 20% a year. Stock market isn't up 20% a year, but this boring water company is. And by the way, that goes back to my focus on things like Texas Pacific Land and LandBridge up here, because that's one of the things they allow that they promote on their land that they lease out. I think I've spent enough of my verbal energy up till now, and I believe if there's any questions we can answer. And I'm going to have to take a drink of Gatorade to be able to overcome my thirst from yapping nonstop for 20 minutes. I'm sorry, everybody.
No, you're good. Like I said, it's your show. I'm here to talk for 5 minutes and let you do the rest. Not really a ton of questions per se. I'll start with Brian. Something about beneficiary. What Jeff said was correct, though. If you have a self-directed IRA, you'd want to update your beneficiary info at the custodian. That's not something we would handle. If you had, just an IRA with us through, say, Apex, then of course, yes, we would be the ones that you'd have, or you'd set up the beneficiary information, through. Jeff, I see your question. I'm going to skip it. I'm just going to say in short, there could be various reasons why you saw the activity that you did in Balanced in June. I guess maybe a question for you, Kelly. Like, do you know of any of the companies in Balanced that we might have made some trades on? He said he saw a bunch of trades, and I think I have a couple reasons as to why, but it's not necessarily pertinent for this call.
Well, certainly when over the last 3 months, given the market's huge volatility, I'm not shocked at all that there would be trades in there. And also, everybody, if you remember, a lot of times be very wary. Sometimes you have a trade, but it's a fraction of a share.
Yeah.
And when that occurs, you might see a lot of that. That is just small micro adjustments that we use to be able to keep a portfolio in balance, especially portfolios that are not heavily funded. So if you have a portfolio of $1,000 in the Balanced, it's a very small amount of money to put in there. So you have to buy mostly fractional shares of things.
Yep.
And once you have a fraction of a share, the balancing is very delicate. One of the things, and by the way, since there's no charge when we buy and sell in the market, these fractional shares, there's no issue there in terms of degradation of a portfolio. But what I have noticed is that I think a better way for some of the people that have funded these portfolios that have, say, 20 stocks in them or so, to maybe do a rebalancing on a much more infrequent basis, because owning a half a share or 3/4 of a share of something isn't going to make that much difference from 1 month to the next, or especially one day to the next.
Yeah.
So one of the things that might take away some activity, although it doesn't harm you, is to say, hey, if it's fractional, don't have the system not buy anything until it's a full share. But even that is problematic. But it doesn't degrade performance so much. Is what it does is it creates, I think, unnecessary tickets, which you don't see as a person that is on the platform, but we see, because we see how many tickets we make every day. So if we were to always rebalance on a daily basis, we could have thousands of tickets a day.
Right.
Even though we're only trading a small 40 or 50 universe of stocks inside the Smartfolios.
Yep. I was going to kind of leave it at that my shortest possible explanation was going to be that it's probably a lot of fractional shares. And you basically said exactly that. Jim had a question about big tech, basically. And again, we have to refer to the disclaimer. We can't give, of course, financial advice, but basically, is it worth it to continue to own big tech based on its performance in 2025?
It's hard to say no to that. In the beginning of the year, I thought big tech would have its problems. And I'm not patting myself on the back, but it did. I mean, a lot of big tech stocks were down 30%. And so that is a problem, at least by my definition. Something down 30% is a problem.
Yeah.
But another thing that happened this year is they rallied it all back. So what does that say? It just tells you that, yeah, it is a good investment no matter what they throw at it. In this case, it was tariffs. It doesn't matter. That is what wants to be owned. Part of it, to me, thinks it's not my generation, but there's a younger generation of people, Gen Xers, Gen Zers, that have a little bit of money, and that's all they know. They know this. This
Right.
is what they know. And anything involved with this is Apple, but it also is all the other big tech companies are really inside of a phone in many, many ways. And it's hard and that's why we have these $1 trillion valuations in the stocks like Microsoft or Apple or Nvidia. And so my early call in the year, at the beginning of the year, was to say big tech was going to have trouble. And I was right, but it was short-lived. It's already over after 2 quarters. And so, yes, I do feel big tech is a good spot to be in now. 6 months have gone by. Markets are at all-time highs. Big, beautiful build passes. Market goes up 10% on the S&P. Honestly, it'll be these big tech stocks that lead the way.
Yeah. I don't know the exact number, but I know the Mag 7, I think it probably makes up 25% of the SPY from like a weighted proportion, if you will.
It's something like that. It's not so much 25% of the SPY, but it's certainly at least that in the NASDAQ. And so it is such a huge component of what the market needs, what the market is focused on. So we watch the NASDAQ even closer than we watch the S&P. And the S&P is still the benchmark.
Yep.
And not the NASDAQ, certainly not the Dow.
I know Microsoft kind of lagged for a while, but that's obviously been pretty good for a little bit now as well. And I just remember the time that Apple itself was like 7 or 8% of the SPY. And I'm sure a lot of these other companies, to your point, that when tech kind of came back, I'm sure I don't know I guess I could look it up after this, what the actual percentage is, but it's something, I guess the only point I was going to make, like if you were scared of tech, like anyone who has SPY gets exposure into those tech companies through the S&P anyways.
Right. But keep in mind, everybody, Lee is right. They do represent a huge portion of the S&P, certainly the NASDAQ. And they are the growth companies. It is the growth story of our time. And that growth story will not die. It will die hard.
Yep.
It's not easy. It is Bruce Willis on steroids. They will stay afloat, hook and crook, because they are just so widely understood. And it's going to take a real recession, something very like a deep wound to our country for those stocks, which are all U.S. domiciled, at least in terms of what they're supposed to be, for those stocks to have any real deep problem. I want to, if I can, everybody, let me end on another kind of note. Lee, do you have anything more to add? I was going to show something to people of another thing I'm looking at.
I just stole your screen, but it's back now.
Is it back? Okay, look, everybody, these are covered call ETFs. We don't do anything in them yet, but I'm looking at them. So what's the point? This one here is a covered call on the NASDAQ. It's on the NASDAQ 100. What does it do? It basically pays a monthly dividend. This one here is a $16 stock. It's paying 16 cents or so a month, somewhere in that area. Here was 16 and a half. It just paid another 16.6 per month on a $16 stock. Well, 16 cents a month is essentially $1.92 a year, $2 on a $16 stock. The math of that is, so it's $1 on an $8 stock. That's 12.5%, about 1% a month. Covered call writers are people that what they're doing here is they're taking the NASDAQ options and they're selling them against the NASDAQ, either the futures options or the actual NASDAQ options. This is the NASDAQ. If these prices stay steady, look at how steady they are now. Obviously, during the beginning of the year, when there was the tariffs were coming into play, the markets are kind of drifting lower, and then they go really way down. So these things have lost. If you look at it from the beginning of the year, they went from 18 all the way down to 14.50, down 3.50 or so a share on an $18 stock. Well, that's over 20%, 22%. But if they're paying 12% a year, about 1% a month, if these things stay steady, these are things you may want to own in the long run if you want to have a conservative point of view. There's no real way I'm looking to find out to see if we can hedge them, but that's probably difficult. The key here is volatility. If the volatility is low, you kind of want to own them. Here's another example here. This is the same thing on the Russell. Same move down when the markets are scared. They pay their dividends, but you lost so much money in your stock price that you don't care about the 1% a month when you lost 20% in the month on the price. But as long as they stay like this or like this over here, these things pay. BITO is the same thing, by the way, on cryptocurrency. And these things are paying about 42% a year, 77 cents a month. Think of that. Well, times 10 plus 20%. I mean, they're paying huge dividends. If they're steady, these are things to look at. These are not for the uninformed. These are things, though, that a lot of people don't know about. It represents a strategy that many people know about, and they use it effectively to augment income and just, frankly, make money. It's a strategy. The people that are good at it make a tremendous amount of money in the markets. Traders. These are ETFs that we can all buy. I'm looking to come up with some kind of a Smartfolio that represents these things. It will be extremely aggressive. I'll put like a triple red exclamation sign on it, like a nuclear sign. But these are things that we want to pay attention to. You do need someone or something to kind of understand them and explain them. They are not for a 70-year-old person on fixed income, no matter how much income they may need, unless they can absorb the idea that these things, could easily lose 20, 30, 40%. And therefore, any dividend you get, they have to continue to pay that dividend for years for you to break even. I just want everybody to know these are the kind of products that we will look at and see if we can build some technology around it to offer it to everyone in a safer way. So I wanted to end on that to say, hey, these are products that we want to, include in our offering, and also to show that, we're looking at all kinds of new things to be able to update our Smartfolios so that they represent the best of what's out there and the best of things that our technology can manage.
Yep.
With that, happy 4th of July, everyone.
And I realized I never asked you about 4QR. So we can hold it for next time unless you have a second.
I do. So
at a high level, explain the portfolio and how it's different than everything else.
Okay, so the 4QR, thank you, Lee, for reminding me. The 4QR is a unique strategy. It is not running on machine learning. It is doing something else. It is, for the people that might understand this, it is a variant of the dogs of the Dow theory, but it has an efficacy in a different way. Here's what it is. Every quarter, which is, by the way, today is the beginning of the second day of a new quarter. So every quarter, the 4QR chain will look and say, in the previous quarter, and in our case from today, it would be everything from April 1st through June 30th, that's the previous quarter, what were the stocks that had the best return? Sorry, the best beta return. The beta is something that is a return relative to risk. Not like a Sharpe, it's a little different calculation, but essentially the best beta stocks. We can sometimes call it the beta bull. So what the 4QR is saying, hey, what were the best 10 stocks in the last quarter? Let's own those for this quarter. If they were good the last quarter, probability is that they may not be as good as they are in the next quarter, but they probably have momentum and they are probably a good bet for the following quarter. That is the concept. Every quarter, rotate the 10 stocks to be the highest beta bull stocks we have in the S&P 500 and the S&P 400. So we look at that universe and we say, what are those? And we're going to pick those 10. Right now, if everybody were to go to their 4QR Smartfolio, they would see the 10 picks, the 10 symbols that are going to be used and held, buy and hold, for the whole of the third quarter. And some on around October 1st, they will all be sold and a new batch for the fourth quarter will be put in. That is the concept. And we roll that literally every quarter, every 3 months. Yep. Conceptually, it's a very aggressive strategy. You're basically saying if it did good yesterday, it probably will be good today. Or if it was good last quarter, it's probably good this quarter. And there is efficacy to saying that. I can go into a million reasons why statistically, but I think everybody intuitively knows that, hey, if it was a good stock last year, it's probably a good stock this year. Same thing, but we do it a lot faster by doing it every quarter.
Yep.
That's the strategy behind the 4QR.
Awesome. Yeah, I like I said at the start, I get enough questions about it. I felt it was valid to go over here because it is unique. And honestly, sometimes to a new person, when I talk about that one, it confuses them as to what we do in all the other portfolios because it is different. But well, like you started to say, Kelly, happy 4th of July, everybody. Hi to anyone that I didn't say hi to in the chat. I saw Ramez was here.
Hey, Ramez.
So thanks for being here as well as all of the other attendees. We will be back in 2 weeks. So the 16th will be our next AI circle, same time as normal. And have a good 4th of July in a couple days and have a great rest of your night.
Be well, everyone.